Have you ever wondered, should I put down a larger down payment when I'm purchasing a home, or should I take that money and buy down the interest rate? Well, in this video, we're going to discuss the difference between putting down a larger down payment versus buying down the interest rate permanently to see which one gives you the most savings as well as the bigger down payment. In this video, we're going to go over some of the pros and the cons to doing both buying down the rate as well as putting down a larger down payment. And oh, by the way, you're going to want to stick to the end to get the free gift that I have for you for staying and listening to our video. Let's get into the video. So over the course of my 9 years in the mortgage industry, I have seen people lose potentially thousands of dollars by making the wrong decision on whether to put down a larger down payment versus the interest rate. It sounds simple enough, however, it depends on your financial strategy that you want to use in terms of owning a home. So let's talk about a recent client that I've had. I had a client by the name of Jasmine. Jasmine had $30,000 that she had saved up for the purchase of a home. However, she had went to a previous lender and they told her to put down the full $30,000 as her down payment, which would, of course, lower her loan amount. It would lower her loan amount, which would give her a savings in her actual monthly payment. For the purposes of this video, we're going to talk about principal and interest payment only because taxes and insurance vary based upon where you are in the United States. So the loan officer gave Jasmine her numbers and she was pleased. She came for, like I said before, she came for a second opinion. And when I ran the numbers, Jasmine was thoroughly surprised at what she found out. What Jasmine found out is I had given her two different scenarios. The first scenario was her actually putting the full $30,000 down as a down payment. And like I said, it reduced her loan amount by the $30,000. For the purposes of this video, we're going to use an example of a $300,000 house. So she put down $30,000, which took her loan amount to $270,000. The second scenario that I provided for Jasmine was taking $15,000 as a down payment on her home and using the other $15,000 that she had available to buy down her interest rate. We were able to take that $15,000 and buy her interest rate down by 1%. So instead of her interest rate being 6.5%, her interest rate ended up being 5.5%, which gave her a huge savings over the life of the loan. Now, by Jasmine putting down the smaller down payment, as well as buying down the interest rate 1%, she brought down the interest rate 1%. Over the life of the loan, that saved Jasmine $30,000 over her 30-year mortgage term. Along with her saving money over the course of her mortgage term, it actually didn't cost $15,000 and she had additional funds to go towards her closing costs. So let's discuss what a down payment is. The definition of a down payment is the down payment is the amount of money you pay upfront towards the purchase of your home. And again, in that example is the money that you put down on the home. The more money you put down as a down payment gives you a lower loan amount, which also gives you a lower monthly mortgage payment. That's great. So here are some examples of what the down payment would be on a 5% down payment on a $300,000 house, 10% as well as 20%. And oh, by the way, if you put 20% down on a home using conventional financing, you will get rid of private mortgage insurance, better known as PMI to most people. Now, what is the interest rate buy down? The interest rate buy down is when you pay upfront to permanently pay your interest rate down, commonly known as paying points. When you pay points, a point is equivalent to 1%. 1 point is equivalent to 1% of your loan amount. So let me give you an example. On a $300,000 home that at 7% interest rate, you're looking at $1,996 a month. However, if you have a 6% interest rate, you're looking at $1,799 a month. That $197 a month difference saves you $70,920 over the life of the 30-year term. So let me give you another example, still using $300,000. So let's say you're buying a home, a $300,000 home, and you have $30,000 to use. You have two options. The first option, with the bigger large payment, you're going to put down the full $30,000 as your down payment, which gives you a loan amount of $270,000. The interest rate on this will be 7%. That will bring your principal and interest payment to $1,796. Over the course of 30 years, you will pay $646,800 paid total on the home from start to finish. Option B is a smaller down payment plus the rate buy down. You're going to put $15,000 down as a down payment, which gives you a loan amount of $285,000. You're going to use the other $15,000 to buy the interest rate down from 6.5% to 5.5%, which will give you a monthly payment of $1,619. Over the course of 30 years, you would pay $582,840 paid. Now, you're going to say, well, which one is the best option, Kevin? It depends on how you want to do business. If you put down the larger down payment, you're going to have more equity into your property, and it is going to lower your monthly payment. However, if you're monthly payment conscious and you'd like to have a lower monthly payment, then you're going to have some equity in your property from the down payment, but you're going to have a bigger savings from buying down the rate 1%. So in all cases, it's going to vary. How much it costs to buy down a rate is going to depend on the size of your loan amount, what your credit rating is, and also the time of when you do it. But in most cases of examples that I've seen, there is a far greater savings with buying down the interest rate versus putting it all down towards down payment. If this video has been helpful, do me a huge favor and hit the like button. If you're new to the channel, also hit the subscribe button and the notification bell. I told you if you stay till the end of the video, we will have a gift that we can give to you. A link will be below for you to get a calculator which allows for you to compare down payment scenarios versus interest rate. So when you're out here looking to buy a house and you have funds, you can be educated on what is better, a larger down payment, or what is better for you, a larger down payment or buying down the interest rate. I'm Kevin Jefferson, the People's Lender. Thank you for watching. Have a great night.